In your money this week, stocks were slightly positive, bond yields ticked up a bit. We had good economic and sales data, including today's jobs report. Broadcom had an interesting quarterly earnings report that hit some tech stocks hard, all of which Andrew and I will discuss and more. Andrew, TGIF, buddy, you ready to roll?
Ready to rock, man. Loving the upping game of the graphics. Every week it's more impressive.
I'm just trying to do it for you. Keep you engaged, keep your head in the
I
game,
love it.
entertain myself. But I will stop sharing this because I do want to show you as a way that we've done before, just kind of kick off. Here's how stocks and markets performed in the last week since we recorded. So looking at this, it's kind of a flat week for stocks. The S&P was up. I think it's going to be down today. We're recording just after the market opened. I think so. Stocks, the S&P will be slightly negative this week. Russell 2000, MSCI, EFA, developed international, emerging markets, all kind of flat, slightly positive, slightly negative. Treasury yields have gone up a bit. And then pulling back the curtain, maybe looking longer term, which we have done in the last few meetings. How have equities performed since the market bottom in October of 2022? So the S&P is up 111%, all-time high. Russell 2000, all-time high. Developed international up a lot, slightly negative from its all-time high, and emerging markets continuing really to chase the S&P up 102% and also at an all-time high. But you wanted to kick it off this week with a discussion of good economic data we're seeing. That's the ISM report, I think, jobs report, and sales data from Costco. So let's start with ISM. It was a fifth straight month of expansion for manufacturing PMI and the strongest reading since May of 2022. The services showed the services side of the economy expanding as well. So give it to us. Why should investors pay attention to the ISM, and what did you like about this report?
Yeah, so to give you a little context, if you're out there and you don't follow this report, I one thing that I really appreciate about ISM is it's very easy to just get a high level view because you know what the numbers mean. And you might not know if you're listening to this, but you're about to know. So you might think you have no idea, but you're about to know. I think that's how it goes. But with ISM, a reading of 50 is essentially neutral. So anything above 50 would imply expansion, anything below 50 would imply contraction. And as you mentioned, we're continuing to see expansion there. Not only expansion, but we're seeing places where it's accelerating. The services PMI was 53.6 in the April reading, which again, positive. Came in at 54.5 on this reading. On the manufacturing, the overall PMI was at 52.7. Last month came in at 54 for this most recent month. And you also get a great breakdown of individual components. So if you think specifically about manufacturing, what you want to see is expansion, but you also want to know, hey, what's coming down the pipeline? And you get a read through on that with things like new orders. New orders came in higher than the overall PMI, came in at 56.8, a nice improvement over the last month, which again, last month, if you think that this can be somewhat predictive, new orders last month was 54.1, and our overall reading was 54 for this period. So we're seeing continued expansion, both on the services side of the PMI index as well as on the manufacturing side. New orders is probably the one thing that stands out most to us. Prices are rising. We've talked about inflation in here, but they're rising less than what was expected. Even on this survey data, kind of across the board. And so you're still seeing, and inflation is always a moving target, and people don't like rising prices. But if prices are rising, I'd rather them be rising less than we thought they were going to be rising. We'd still like to see prices coming down, certainly, but seeing that is relatively positive. And when you think about what has been soft, and you alluded to the jobs data, there's really, when you look at the ISM services index and you look at what's good, what's above 50, the only thing weaker than that 50 reading where you're kind of neutral is employment. It came in at 47.9. When you look at the manufacturing side, it's at 48.6. we're continuing to see survey data that is relatively weak on employment, and we're continuing, as you just alluded to get insanely good jobs numbers. And if you believe the jobs number, you had to have liked not just the number that we just got, but also the revisions for the previous months. Uh, I continue to think that over the last several years, about 80,000 jobs per month have been wiped out in revisions. And that has been done. I continue to think we're probably overstating job creation by somewhere in that ballpark.
So before we get there, because you and I have talked about skepticism with sometimes the inflation reports, sometimes with the job data, which we will get to. What are your thoughts on the ISM report and its reliability? And do you view it basically a little bit differently than those other two?
Yeah, great question. I do. And a lot of it is what I like about the ISM survey is not only are you able to get real data points in real time, but you get a much more nuanced picture
Okay.
than a lot of these large economic things where you can say, you can form a more, I wouldn't say it's a clear picture, but you can put in a lot of the puzzle pieces to know what you're actually looking at in the economy, if
Okay.
that makes sense. Because you can look at and get real data as well as commentary, for instance, and I'll get to some of that. But you can get real data from those that are polled on everything from new orders to production to employee, supplier deliveries, inventory. All of these things give you a little bit more clarity than just, hey, here's one data point and here's how it's responded over the last month. You do get a nice breakdown in there. And I think that's pretty helpful. When you think about, for instance, the ISM manufacturing, you also get anecdotal evidence that usually, when you add it all up, it kind of aligns with the survey itself. And you get a real sense of what operators are actually seeing. And I'm cherry picking a quote here, but this is from somebody on the machinery manufacturing side. This is a quote from a respondent. The Middle East conflict is triggering shipment delays and uncertainties. Elevated gas prices and inflation will surely impact our purchases. However, over the last quarter, we've seen increased demand that was unexpected. Well, when you look at the trailing survey data, that's kind of the story. And it very closely aligns with the data points we've gotten over the preceding quarter, where we're saying, hey, oil prices are going up. There's more uncertainty. We're not sure about new orders. And yet here we are with better than expected orders. That's the summary of the report. And that was just one respondent giving their feedback of what they've seen with their business. But you get, I think, a more robust narrative sometimes from the ISM reports than you do from other economic data points.
Does it tell you anything that both manufacturing and services are expanding at the same time?
Yes.
Yeah,
And I think the biggest thing to think about is this is the Institute of Supply Management. When both of those things are expanding, that is good for the economy.
got it. Okay.
When both are in expansion on the services and the manufacturing side, it is a read through that business conditions are good. And at some point, that data, I do think it's forward looking. They're producing things that have not yet been sold, have not been utilized, have not yet created value, but they're producing things that at a higher clip, at a higher rate, with prices that are elevated but less elevated than expected. Those are all good positives for the economy moving forward.
All right, so let's pivot to the jobs reports. There's the ADP employment report that came out and today's jobs report. They look to me like they were both strong or maybe stronger than you might think, given concerns that we've had about the labor market. We've touched on the issues that we have with those reports, maybe not the ADP as much. We haven't chatted about them. So as a starting point, I guess, what's the difference between the ADP report and the report that came out today? And then what did you see in them and what are your thoughts?
So the ADP report, I would actually argue, is undersampling. It's not a broad enough cross section of the economy in terms of what they're getting, but I think the data that it does have is more reliable and more accurate. It's generated by ADP, which is running massive amounts of payrolls.
Okay.
So I don't question the data. I would question the extrapolation of the data
Okay.
at times. Whereas the BLS report is really probably undersampling and under delivering on scale and drawing more conclusions historically. And we see this, and I don't. I think this is actually an incredibly apolitical opinion, but the BLS report is always wrong. That you and I know talked prior to the genesis of this revolutionary podcast months ago. But one of the crazier stories of 9 months ago or whenever it was Trump, ousting the head of the BLS and not liking the jobs report. And I actually thought like, yeah, that we need to redo this. Do I now think it's any more accurate? No.
Yeah. Yeah. Right.
So there has been a historical and marked pattern in which
So
about
should
once a
investors
year.
ignore these, or did you follow them? Do you have any takeaways from them? How do you look at these reports?
Yeah, I follow them. I think what's interesting to me is investors definitely are looking at them. Even today, we are now at a spot in which a rate hike is fully priced in by the markets. So the
Yeah.
market is taking the employment picture as very strong in no small part because of this data. My
And that
concern would
Andrew,
be
that
is
that's the narrative that inflation is hot, and the only thing that was keeping the Fed from raising rates potentially was that the labor market was weak. But if the labor market's in good shape and inflation is not slowing down, then why are we talking about cuts? We should be talking about hikes.
exactly,
Yeah.
exactly, and that's the way the market's going. And I think as professional allocators of capital and investors, we have to be mindful of that.
Right.
There's a great danger. I could be completely right, but if the market disagrees with me on anything, guess what? I'm actually wrong.
You are wrong. Yeah.
So for us, we don't put a lot of stock in the employment picture other than how is the interest rate environment reacting to it? How's the bond market specifically reacting to it?
And rates
Um,
went up today.
yeah.
Yeah.
So taking up. And that's where I think for us, something's going to give. We know historically there's been about $1 million, a million jobs wiped off annually the last several years when they do a massive revision of the BLS data. Comes out to call it 80,000 jobs a month. We know that has been there. I think that's kind of the baseline. I think if you want to look at the jobs created as something closer to realistic, historic precedent would say, well, take 80,000 off of it.
Yeah.
It's all kind of a moving target. It's all relative. I think the real question is, are we going to take off more than 80,000 per month, or are we going to take off less? I think the baseline is, hey, we're overstating a million jobs created each year. And that, again, and that's not arbitrary. That's what we've been revising for the last several years. I struggled tremendously, and people that listen to the call will be really annoyed that I'm going here again, but I struggled tremendously with the employment picture because we follow layoffs.fyi. You can pull it up, you can look at it. We've seen more tech sector layoffs this year than we did at the beginning of COVID. We have had numerous companies, Meta and others, laying off thousands, if not tens of thousands of workers. Notably, just coming out of earnings seasons, I don't recall any company that we covered, and there may be one, but I don't recall a thematic warning shot to analysts saying, hey, payroll is about to really expand because we're hiring a lot of people. But there's been plenty of companies that have come up and said, hey, we're doing layoffs. So I struggle to understand how we're not only creating jobs, but creating significantly more than people thought we were.
So the bottom line, though, is you make a couple of really good points. One is, you know, treat data skeptically if it deserves to be treated skeptically, but you can't be an ideologue about it because markets move based on differences relative to expectations. And so the market has a set of expectations now that it's building through these data sets. And what we're seeing potentially is, a market expectation of rate hikes, not cuts, yields ticking up, maybe elevated yields not being solely a function of the war and inflation, but somewhat connected to it. So you know, good economic data in the ISM survey, good jobs data, if you believe it,
Yep.
which, so a couple things there. But you also saw some strong sales data from Costco that you wanted to bring up to round out the picture.
Yeah, we talked last week about some of the challenges that we're looking at. And admittedly, I did not do my homework and really dig in on some of the stuff I wanted to on the credit card stuff. But we talked about just the general strength of the consumer and what was going on there. And we had a great report. Costco is a great company because they give you these data points. Fastenal is another one, totally different side of the economy, but more on the manufacturing. Fastenal, 4 months in a row in which they are outpacing their sales targets on a seasonally adjusted basis. Fastenal is supplying that manufacturing base. When we talk about ISM manufacturing, Fastenal is maybe even ahead of that in terms of being a leading indicator. So that's very positive. And Costco really having their best report in well over a year and saying people are coming to the store. They're putting more things in their shopping basket, and that's the prices are ticking up. The total volume of things being sold is ticking up, and that is not just because of the price of gas at the pumps at Costco. They are seeing expanded spending from consumers, which doesn't always. I mean, I've made bad purchases. You've made bad purchases.
Whoa.
Doesn't mean it doesn't mean that's always a good thing. But we're not seeing everyday consumers. I don't think people picture Costco shoppers as super high end aficionados. I'm a Sam's Club member.
Janine will be offended, by the way.
Yeah,
When she
well, other than
listens to
her,
this later, she will be somewhat
well,
offended.
well, we don't view her in that lens because of Costco. Obviously she has excellent taste,
Yes.
as evidenced by your prolonged
Your
relationship
co-host.
and her commitment
Yes.
to you.
Yeah.
But Costco's it's middle America. When people are buying more stuff at Costco and spending more money at Costco, it's not a bad indicator for the economy at all.
Are you a big Costco guy? You said Sam's Club, huh?
Yeah, we're Sam's Club members. It's just a lot more convenient for us location wise, but we don't buy in bulk a whole lot.
Yeah. Would you change your outlook if in the middle of those Costco's where they have all the clothes, there was like a Masters section?
Oh yeah, for sure.
For
Yeah,
sure, right?
I'd switch allegiance very quickly.
Instantaneously. All right. So when you put ISM, ADP, payrolls, Costco together, what headline would you put on the economy right now?
I think my headline, and this is maybe snarky, but despite headlines, economy performing well.
I like it. Those are the headlines. That's clickbait right there.
Yeah.
Despite headlines, economy's doing well. So pivoting to AI in the stock market, you saw something this week, maybe not new, but some clear reminders about how dominant the AI story is in the market, which you referenced when I asked you about Broadcom's earnings report. So let's start there. So Broadcom is a tech company, semiconductors, enterprise software, security solutions, all sound like things I don't fully understand. They're heavily tied to AI. They had a good report, but it sold off, as did some other names in the space. So what happened?
It's entirely an AI story. And I would not argue for what it's worth that it shouldn't be. This is not a case in which I'm arguing with market reaction to a print. I'm not upset by it.
Yeah.
Broadcom has been on a tremendous run, really riding the wave of AI. And as they came out, they reported very solid numbers. They backed off their guidance in a major way. Previously, they said they offered $100 billion in revenue guidance for 2027. They backed off that. They said we were going to be significantly above $100 billion. They've completely backed off of that. They've also said that, hey, we actually think Q4, our next quarter, might be down quarter over quarter from where we are. And the reason is AI chips are going to be significantly below where analysts expect those sales to be.
Okay.
That's a problem. What has carried the stock is not the earnings per share, the revenue, any of that. What has carried it is the source of the revenue and the source of the earnings per share and the optimism that this curve can go on forever, ever accelerating. And they came out and said, not next quarter and probably not in 2027. And that hammered them. We're continuing to see AI just dominate the headlines. Alphabet issuing equity at the market, trying to raise capital. I wonder.
You also had something on Netflix AI algorithm or something, right?
Yeah. So you've got Alphabet saying, hey, we need to raise more money for this AI stuff. We're going to actually issue stock, which I would argue is, to my knowledge, and you might have a different example, but we talked about it in the office. I've never seen anything like that. I cannot recall a time in which a company of this size, this magnitude, was doing a secondary offering out to the market. Companies that are that big and that successful, typically you're looking at the opposite, where they're buying shares back. Um,
Unless you think your stock has had an extreme run and might be overvalued. I mean, a good capital allocator would issue stock if instead of buying it if they didn't think it was
it's
the right opportunity to do so.
I don't disagree, but in that regard, I kind of think it's a damned if you do, damned if you don't.
Yeah,
Either
no, I
I
get
think
it.
my stock is so overvalued that I want to put it out there, which doesn't say a whole lot about where your stock's currently positioned, or you just think, hey, I really need the money.
Yeah, no, you're
So
right. I was just
yeah, I,
countering a little bit, not countering, I guess I would say the only reason I would think a good capital allocator would do it is if they thought the stock was
I'm
overvalued.
and to that end, I'm curious to see if some of these other Mag 7-ish companies do the same thing.
Yeah.
Um, because they weren't beat up too much by it. Stock was down about 3% when they announced it. If you can put some shares out there and the market forgets about it quickly, it's a great move. The interesting one to me was Netflix. Netflix came out and said, hey, we're going to use AI, we're going to leverage AI to improve our recommendations for you on the For You Netflix landing page. I'll be honest, man, stock moved 2%. I'm like, I thought they already did that.
Well, I thought they already did it, and by the way, their For You pages, I don't know,
Horrible.
it's not always the greatest. I sometimes I regret watching like one
Yep.
serial killer documentary
Because then
followed by a Civil War documentary, and now I'm going to be either bored or afraid every night when I turn on the
be
TV,
both.
or be both. Yeah.
Yeah.
Um.
Yeah. But it was interesting that the fact that they said we're doing this thing that as a consumer, I'm not even saying this as an investment analyst or anything like
Yeah.
that, but as a consumer, they announced something that I thought they were already doing. And then they used the phrase AI and the stock went up 2%. So,
I think we should announce that we are using AI somehow in this weekly YouTube
I mean, those
series.
graphics,
We could.
those graphics.
I did those by hand.
Yeah, you
Yeah,
drew those
drew
caricatures.
those by hand. I've been up all night. So I mean, what's the takeaway? Basically, that you know, growth doesn't have to completely roll over. It can struggle sometimes when it's priced to perfection, and it just starts to disappoint relative to that, even though the headline number is good.
I think I don't disagree with that sentiment. For me, the takeaway is that I think there are going to be more, and I don't know how many more, but I think there are going to be more Broadcom like stories in the 6 to 12 to 18 months to come, where companies have benefited from AI and have given guidance that was probably accurate and probably reflected the trend that they saw in place. But ultimately, overall demand and ability to execute on that is not a guarantee.
Yeah,
And I think the bar has been raised very high and stock prices have benefited from for those companies from that. But I use this illustration all the time. Sometimes what you actually want to own are companies with a pretty low bar. And I use this illustration. Everybody can picture me high jumping at the Olympics. Um, if I clear a bar that's 2 feet off the ground, I may not get a lot of credit for that. I jumped 2 feet, but you're like, well, at least that guy's not an idiot. If I put that bar at 7 feet or these heights that these Olympians jump, and I do it, not only am I not getting credit, but it looks stupid. I think people are saying, man, that bar we set for Broadcom now looks stupid.
yeah. I mean, it's kind of like the way I think about it. Sometimes it's that amazing movie that everybody tells you have to see, to the point where finally you go see it, and it's probably a pretty good movie, and you're like, what was the big deal about that?
Yep. Yeah.
Um,
It's like the first
so
time you have breakfast at Jack's.
Jackson, Alabama, yes. Wonderful chain. A lot of happy memories are made there, as far as I could tell. But when I went, I had heard a lot about it, and I'm not a big biscuit guy. Let's just leave it at that. Um, so I would follow that up with. I think investors need to keep an eye on their tech AI exposure in their portfolios. And we've talked about rebalancing before. We talked about it last week, and just understanding how tied you are to this theme. So I want to wrap up here because we say that, and I realize I don't know if we've ever given people actionable ways to kind of look into that. So this is sharing Morningstar, and you can look for whatever mutual fund or ETF that you own. As an example, if you're owning those commingled funds, it's easier to understand what you own when you're getting a statement with individual securities. And basically, when you scroll down, sorry, you go to the portfolio tab, you scroll down and you can look at your holdings, and these are your top 10 holdings in the index fund. They 38% of the portfolio. But as you know, just as a way to highlight what we're talking about, look at these names that you own basically if all you do is own the S&P, Nvidia, Apple, Microsoft, Amazon, Alphabet, Broadcom, Alphabet, Meta, Tesla. Oh, and then you get Berkshire at 1.4. So you essentially own a tech ETF, an AI driven ETF. And that might be great, but you probably should know what you own. You should do this research. You should diversify, if you, and you should rebalance if you need to.
Yep. I do wonder, you're looking at the S&P 500 right now. I wonder, people have clamored for the divergence away from the Mag 7 for some time. I would be curious, and we've been talking about this in the office. I'd be curious if you put a pin in this and we looked at the end of the year and just said, "Hey, let's look at the last 7 months of the year." I'd be really curious to see the divergence. And obviously, I don't know what it is yet. We will on December 31st, but I'd be curious to see the divergence between the S&P 500 market weighted return, the true S&P 500 total
Yeah,
return, and an equal weight
and an equal
index
weighted
at year
return.
end.
Yeah.
I think
I mean,
that's going to be an interesting data point.
we could talk about that. I mean, I think for next week we wanted to dig into the SpaceX IPO and residential real estate, but I can add to the chart the equal rated return
Yeah.
since the market bottom, and we could start looking at it just to see.
Yeah, I think it'd be fun.
All right, man. Well, thanks. Have a great weekend. Any big weekend plans?
No, I think we're going to see a mutual friend of ours has a son in town playing in a lacrosse tournament that's about
Oh,
2 miles away from where my son is playing in a baseball tournament. So, going to go watch some youth baseball and some, I guess, still youth lacrosse.
that makes me real happy because shout out Thomas W. He's a huge fan of everything we do, and I think he's one of the top lacrosse players in the state of Alabama, is what I've been told.
Yeah,
And a
Thomas told me that.
yeah, and a workout fiend, and I think he's got a really sweet pickup truck. So say hi to him. Have a great weekend. You're a good dad. You're a good friend. You're a good co-host. Talk to you later, buddy.
Man, I got to come by more.
Yeah, exactly.